Hi guys, KP this side. Hope all of you are doing good. This is vlog number 48 in Decoding Equity Markets with KP series. For my last vlog, that is vlog number 47, I got lots of messages from you. A lot of them on YouTube, lot of them on my WhatsApp, lot of messages of appreciation. You liked the content a lot, and thanks for acknowledging the same. So here I am back again with another video to discuss the macroeconomics, the indices, how they are placed. Last 1 week was not very favorable for the bulls in the market, but did something really significant happen in the market? That is the point of discussion. Probably not. There was no such great unfold of events which caused this market to see some red color. And this is very normal, guys. I have told this many a times in the past. When you see the markets are on the verge of going into the bull run, or they are already into the bull run, timely corrections are a part of the market. Having this kind of a mindset that markets will every day close in green or every day markets will go up, this is like living in a fool's paradise. Don't have over expectations. The main reason what throws people out of the equity markets is over expectation. Don't have that. Small timely corrections are always gonna happen. If you still have funds to invest, look for good opportunities. If you don't have funds, shut up and sit quietly. See the drama that's happening in the market and wait for your stocks to turn positive. Wait. Patience is gold in equity markets. I always say that patience is gold in equity markets. You got to learn how to be patient. If you keep pushing the panic button just because Nifty has gone down by 50 odd points, better don't do equity markets. Put your money in SIPs or do fixed deposits. That's the safest option for you. Now, like the kind of trend we follow in our videos, first part of our discussion is global news, like what I call it as globonomics. We'll understand what happened at countries level. Then my next part of discussion will be where are indices placed based on their Friday's closing. Part 3 of my discussion will be how what all stocks are looking good to me. 2 stocks I will recommend you today, and 2 of my old recommendations where my short-term targets have already been done, but again the stocks have corrected from those levels. Exactly from those levels the stocks have come down, but I feel there is still an opportunity to re-enter into those 2 stocks. So 2 plus 2, 4 recommendations I will give you today. And part 4 of my discussion, which is a very important one only for people who do FNO, is how they can exercise some caution when they are doing futures and options. Okay, so starting with my first part of discussion, let's talk about China. For my last couple of videos, I have been telling this to you that China has come to a conclusion that they will have to come up with some strong stimulus to revive their economy out of this slowdown which they are suffering from since post-COVID times. There has been a really slowdown in their real estate. There has been a slowdown in their auto industry. So to pick up the demand, they have already started with certain stimulus. First time in last 10 months, the interest rates, that is the prime lending rate, we call it as PLR, or they refer to it as LPR, but it is the prime lending rate only, for 1 year and 5 year tenure has been reduced by 10 basis points. But then 10 basis points is just 0.1%. But that seems to be not doing the magic for Chinese economy, because even after this rate cut by 10 basis points, the commodity prices have not shown any momentum. So basically what happens is when you cut down the rates, people will start borrowing, and using this money they will again start looking for consumption. So the first impact that we see for this is in the commodity prices. But last 1 week commodity prices haven't changed much. Okay, like for copper or for crude oil or for iron ore, the prices have not changed much. In fact, for the prices are still falling, which means the demand is not picking up. But I would like to give it a benefit of doubt. It's not like today a rate cut has been done and tomorrow the commodity prices should go up. There has to be a gestation period, there has to be a transition period, and slowly and steadily the demand will start picking up. It's not like today I have cut down the rates and tomorrow suddenly the demand will shoot up. Further, they are anticipating another 10 basis points rate cut in next 6 months. That is from July onwards till December. They are thinking during this period, they are thinking that they will go for another rate cut of 10 basis points. Now, the problem with rate cut is that every time they will cut the rates, it is putting banks under more and more pressure, because banks are being forced by the government or the Federal Reserve to offer money at lower interest rate. But then you understand this very clearly, that for the banks, the business itself is to borrow money and lend money. But if they have to continuously start lending at lower rates, that will impact their profitability. And a number was calculated for this, that every time banks reduce its interest rates by 5 basis points, their pre-tax profits go down by almost 1.8%. Their pre-tax profits. So it's not something like, they can cut down on interest rates at their own wish, and this cannot be used as a momentum in the economy. They cannot continue doing that, because that will put banks under pressure, and then we have that tension of banks filing up for bankruptcy, which is even more worse than a slowdown in the economy, right? So, but considering everything, they are planning another rate cut of 10 basis points. And at this point of time, the economists are of a clear-cut belief that just a 10 basis points reduction in interest rate is not going to revive the economy. Chinese government will have to do something more to make it effective stimulus. Apart from that, they also have in the EV segment, because there is less demand for the auto segment, so they have come up with the tax breaks in the EV segment. That is, if you buy the electric cars, there will be some tax breaks given to you. That is, the cost reductions will be there, plus at the time of purchase, there is a levy of tax. Those all waivers have been given, and that sum total of this is $72 billion. So the EV tax breaks, which they have spread over next 4 years, it will go on up till 2027. But the total value of this stimulus is going to be around $72 billion. But again, over there also, the negative is that it does not immediately show that the demand has been picking up because of these kind of stimulus. So obviously, Chinese government has to contemplate of what more they can do to revive their economy. Okay, this is on the Chinese front. I didn't read anything other than this, anything significant happened in the economy of China in last 1 week. Okay. As far as US is concerned, surprisingly, whatever I told you in my last video, Jerome Powell has spoken the same statements again. That's not my problem, because he's speaking this language for last 1.5 years. My problem is how, based on same news, markets are reacting again and again. I'm not able to understand that. This last week I told you 3 things. 2 more rate hikes during this year. No rate cuts probably in next 1.5 years. And inflation will be under control probably only by end of next year. All 3 points, if you pick up my 47th vlog, I already told it last week. And on Tuesday or Wednesday, when Jerome Powell had to come up with his decision on the interest rates and all, he again came up with the same statements. And because of this, the US markets were going down, which is very strange, very bizarre, very weird. I don't know why. There is no reason for this, and I made it very clear to you, whether you like listening to this or not, the Federal Reserve is playing this game where they don't like US equity markets to go up. I am really not sure why this is happening. Okay, so somewhere we expect markets to attain maturity where they become immune. They start turning a deaf ear to whatever US Federal Reserve is saying, until and unless they say something which really means impactful for the economy. Right? You understand my point? Okay, it's done and dusted. You told already that you are going to hike the interest rates a couple of times. We already know that. But why speak the same statement again and again? And aren't the equity markets matured enough to digest this news at first go itself? Why is it that markets have to react every time to the same news? Right? Think about it. So there is nothing that happened on the US economic front apart from the fact that Narendra Modi has gone to US and all good things were spoken about. But apart from that, if you see, there has been no significant change in the economics of US in last 1 week. Still the markets were under pressure on Thursday and Friday. Yes, as far as the UK markets are concerned, my third country which I'm covering here is UK. They have hiked their interest rate by 50 basis points. Even after so many hikes, they have hiked their interest rates by 50 basis points. 25 basis points was the expectation, but they went for a hike of 50 basis points, and now their interest rates are standing at 5%, less than what is prevailing in US, but still the rates are at 5%. And their inflation still is at 8.7%. So this really calls for a caution. Okay, this really calls for a cautious approach as far as the UK markets are concerned. But then UK inflation at 8.7% and the rate hike being done at double the pace should not have that much impact on the markets, because these things I think have already been factored in. And we know that UK is almost into a recession mode now, right? Now, apart from that, on the Russian front, we know that for last 1 year, 3 months or 4 months now, 15, 16 months, the war is going on between Russia and Ukraine. But now a climax happened in the story. There is a Wagner group, and this Wagner group leader, his name is Prigozhin. Okay, I hope I'm pronouncing it correct. Prigozhin is his name. And this guy was also referred as Putin's chef. That's how they used to call him. Now, this person or this group is basically referred as a private military company. Okay, so which stands for PMC, private military company. And they are just like freelancers. If the country has some emergency, then these private military companies will offer their services to their country or to the government of that country to fight for the country. And this guy was just like a right hand to Putin for all these difficult times in last 15, 16 months. But suddenly they started feeling that government is bureaucratic in nature, or they are deceiving the innocent people, because there has been a lot of bloodshed and there has been no conclusions to the war. Plus they had many other arguments, like some of this Wagner group, some of their employees, that is, who are fighting in this war, they have died because they were not given arms and ammunitions on a timely basis. All this taken into consideration, this group outrightly challenged Putin, and they said they will start their marching towards Moscow. And they made it very clear that they are not having anything against Russian citizens, but they are not happy with how government has been taking this Russia-Ukraine war in the last 15 months. So if they would have continued marching towards Moscow, then there would have been internal dispute between Putin, his military on one side, and this Wagner group on the other side. So inside Russia, an internal conflict would have happened. But today morning, I read in the newspaper, which was a reliever, that they, instead of marching towards Moscow, they stopped. They made a decision that they don't want internal bloodshed when the country is already having tough times fighting another country. They did not want this internal bloodshed. And Prigozhin has decided that they will now start marching towards Belarus and making their intentions very clear, that they don't want any internal blood shedding. Understood? So this is a reliever kind of a thing, because if internally something would have happened, what damages would have happened, how it would have changed the equation between Russia and Ukraine, we don't know. Some uncertainty would have been there, but even if this happened, would it have an impact on equity markets? I feel it wouldn't have had any impact on the equity markets. But some people told me to cover this in my video, so I have covered it. Okay. How about India? As far as India is concerned, everything looks good. Narendra Modi's trip to US has turned out to be very good. Google and Amazon, after meeting Narendra Modi, have decided to increase their investments in India, which is a good sign for us. Tesla soon is going to come up with its plant in India. That's what he's saying, at least Elon Musk is saying at this point of time. But you don't know, Elon Musk's mind or decisions change faster than the weather conditions in India. So we never know what he's going to do, but he's planning to come with the Tesla plant in India, which is another good news. Micron, which I spoke in my last video, has started its process of investing $2.7 billion in India. And Indian government feels once Micron comes into India, there are 4 to 6 other companies who will be encouraged to set up their plant for semiconductors in India. So basically this plant will not produce their semiconductors in India, but assembling, testing, all this packaging, these kind of things will be done in the Indian plant, which will be set up, I think, in Gujarat, right? Apart from that, Indian forex reserves are standing tall at all-time high of $596 billion now, which is again a good news for us. Yes, on Friday, some Adani stocks, almost all of them were under pressure, some falling by 2 to 3% and some falling down by 5 to 6%. What is the news? The news is that Security Exchange Commission, SEC in US, has started a probe into Adani Group, that after Hindenburg has published its report, what exactly was the matter of discussion between Adani Group and its investors in US. But I again don't understand how come this be a reason for the stocks of Adani Group to fall 4 to 5%. In return, Adani management has come up and given on media a statement that they strongly hold this, that everything that has been done as far as conversations with the investors in US is concerned, everything was done following the regulations. So they are very clear about this. Understood? I don't think this news will have any impact. The other proceedings which are going on obviously will continue for some time, but overall, if you see this particular news which caused a fall in Adani shares on Friday, for me does not hold any validity. Understood? Okay, so this is what I wanted to discuss with you in my first part, where I have covered a lot of countries, probably this time: China, US, UK, Russia, India, 5 countries, right? Okay, what about the indices? Part 2 of my discussion. Nasdaq at 13,492, still very comfortable zone. Small corrections here and there. Like I told you guys, from 12,200 to 13,600, there was a one side momentum on the upside. From 13,600, 13,650, a fall till 13,492 should not bother you. It should not bother you. Dow Jones, like I told you, till the time Dow Jones is not breaking past that 34,200 levels, things are not going to look very clear. And once it goes past 34,200, 34,300 range, that is when Dow Jones will start showing a good upside rally. And that is exactly what is going to pull up Nifty also. Because from here, when Nifty is also standing at its all-time high or close to its all-time high, Dow Jones will have great impact on Nifty, because any lack of confidence of buyers in Dow Jones or US markets is going to, put us also in double mind whether it's the time now to start booking some profits or keep some liquid money in hand. So that kind of approach will be there. So Dow Jones has to go past 34,200, 300 range. Then it will start its upward journey in the range of 35,300 to 35,500 is what I feel. And that is when Nifty will go past 19,200, 19,300 is what I feel. So at this point of time, Dow Jones closing was at 33,727, which I feel is okay, guys. It does not change my perspective about Dow Jones. Nothing serious about the numbers. It's looking very comfortable to me. Okay, Bank Nifty at 43,622 is looking good to me. Nifty at 18,665. My real worry will start if Nifty from here on starts falling, because from 18,665 for Nifty to fall by another 315 points to start dropping below 18,350, there has to be something really significant and something really negative to happen in markets for it to go below 18,350, and that is where we will start getting a little worrisome that what exactly is happening in the economy, right? So I am very comfortable as far as the indices are concerned. As far as my top picks are concerned, I will give you first my two top picks at this point of time. The first one is Happiest Mind, which is from the IT services and consulting businesses. Uh, the company in last 5 years, their revenue. Okay, first I'll give you the price band. Right now, the stock is trading at 955. You can buy this stock at 955 for a target of 1035 to 104045. This is the range in which you should look for booking your profits. 52-week high for the stock, I think, is 1500 plus. That's what I feel. And for last 5 years, if you see the revenue for this company, it has gone up from 590 crores to 1332 crores, and its profits is where it looks interesting. The profits in last 5 years have gone up from 4 crores to 216 crores. So company is doing some very good profit margins, right? The EPS is 15.11, return on equity is 26 to 30%. Last 5 years, it has always been between 26 to 30%. That kind of return on equity is very good. Its net profit margin is at anywhere between 16 to 18%. That's good profit margins, right? If you go by price to book value and PE ratio for this company, it does not look very favorable. It looks a little expensive. But given that now the stock is at 40% discount, I feel this is a good time to play the momentum in this stock. Okay, so this is my first pick. My second pick would be from the IT background itself, and the stock is Hinduja Global. It's referred as HGS. Okay, if you go by the symbol, and they are into customized IT services, contact center solutions, back office processing services. These are the other kind of services they are giving. Currently trading at 1068. You can buy it for a target between 1140 to 1150. That's my target for Hinduja Global. Its 52-week high is 1700, and its high in the last couple of years, if you see, it would be close to 2000 rupees. The stock has a face value of 10 rupees. EPS is 74, which is very good. Price to book value is just 2.14, and PE is looking cheap at 14.5 times. The stock is traded both on NSE and BSE, but the volume of shares being traded are very less. I think Friday some 17,000 shares were traded on NSE, some 4,000 shares were traded on BSE, a stock which is not on radar of most of the operators or traders. That is why the volume is less, but I feel the stock is a good buy at its current price. The promoter group is holding 66% in the company. FII is holding close to 12.5%, and there is around 20% of the stocks with public. But it's a good stock. Buy at 1068 for a target of 1140 to 1150. Okay, so these are my top two picks, and the two stocks which I feel have again created an opportunity based on the Friday corrections that happened in the market. One is HEG. HEG you can re-enter, guys, at 1556 with a target of 1700 plus. This time, because you are getting an opportunity to enter at a lower price, I would rather suggest that you book your profits above 1700 the moment the stock goes past 1700 range. And my second pick is Rajesh Exports, which again is trading close to 545. It's a good buy at 545 with a target of 650 plus. So these are my top four picks, guys, as far as the Indian stock market is concerned. Apart from that, like I told you, there are few things I want to discuss about the FNO with you. When you see markets are going up and you are doing futures, understand one thing, guys, especially when you do hedge futures, like that is you buy a future and you also buy a put option, your margin requirements are very less. Understood? So suppose if you have put 10 lakhs in your demat account only for FNO trading, okay, and ideally with 10 lakhs of capital, you should be doing, to be on a safe side, you should be doing 3 hedge transactions. You're aggressive, you can go for 4. 4 is not recommended, but you can go for 4. What do I mean by that? Which means I have taken one Infosys with one put option. I have taken one TCS with one put option. I have taken one SBI with one put option. And I have taken one UPL with one put option. Now, what you need to understand is you have taken put option, so you're protected against downside, which means your downside is not unlimited. But when you're doing futures, you should not, I've seen this tendency in people, you only think how much money can I make if the targets are done. So if I take 2 trades, I'm making X amount of profit. But if I take 4 trades, I'm making 2X the profit. But what you're not understanding is, for 4 trades, if you're taking with put options, you will not even be required to pay a margin of 3.5 lakhs. The leverage benefits which you get in futures is what makes you greedy. And every time you become greedy in equity markets, markets have a very traditional and classical way of slapping you right on your face the moment you start becoming greedy in equity markets. Because you have taken 4 trades, all hedged with put options, your margin requirement is only 4 lakh. And you see 6 lakh is lying idle in my account. What you're not understanding is, these 4 trades, if you look at the total exposure you are taking based on the capital of each lot, for 4 trades it will go somewhere close to 22 to 23 lakhs. By paying 4 lakhs, because you have taken put options, you are able to take exposure worth 23 lakhs and still 6 lakhs is there in your account. Now what I am saying is, in difficult times, if market cracks down for 10 days continuously, your stocks have a good chance of falling by 10 to 20%. Now this 10 to 20% loss is not calculated on 4 lakhs. 4 lakhs is the margin which you have paid to the exchange. This 10 to 20% fall will happen on your actual exposure, which is 23 lakhs. Which means on 23 lakhs, there is a high chance that your M2M loss can be close to 5 lakhs also. I'm talking about a worst possible scenario, 5 lakhs, 6 lakhs losses itself. That time when you start suffering losses, your M2M balances will be adjusted on a daily basis, and suddenly with 6 lakhs of surplus in your account, it now becomes negligible or nil. And then after that, your broker will tell you 2 things. Either you pay the difference, whatever extra M2M losses you're suffering, or we will square off your positions. And those are not the levels where you want to square off your positions, because you're already suffering huge losses in your positions. So whenever you do FNO trading, even if you are protected with put, don't over leverage yourself, is my suggestion. Take trades thinking about losses, not thinking about profits. Because if profits have to happen, I'm happy having profits of 2 lots also, or 3 lots also. So you should always be conservative when playing in futures and options, because the very moment you enter into futures and options, you have already become very aggressive. So one aggression, that you are doing FNO. Don't add another aggression by taking extra positions. Don't do that. In good markets, you will never understand why this is risky. But when markets will start going down, that is when you start realizing that, oh God, I did a mistake. Why did I take so many positions? You got my point, what I'm saying? So when you're doing FNO, FNO can turn out to be a blessing for you if you learn the skill set on how to control your emotions. If you learn the skill set on how to manage your risk by taking limited positions. Limited means less than what you are capable of taking. With 10 lakhs of capital, I am capable of taking 6 or 7 lots, but I will take 2 or 3 lots. That kind of management, when you learn, you will never lose capital in FNO. FNO is good because we are doing FNO on the same stocks on which we are doing delivery based trading, right? So there is nothing wrong when people come and tell you FNO is very risky, don't do it. No, if you know how to control yourself, if you know how to control the quantity of trades that you take, you are going to make very good profits in FNO. You got my point? So cash market, people are not bothered. If markets go down, what will happen? Either I will average or I will sit quietly. When markets start falling, what will I do? Either I will average my stocks or I will simply sit quietly. But FNO is where the panic, you start pushing the panic button, because every time the market falls, you'll start losing money. When you lose money, your M2M will be adjusted against your balances, cash balances. If you don't have balances, then they will square off your positions or they will ask you to pay additional money. What if you don't have additional money? That is where you have to be careful. So my suggestion is, keep your positions limited. You feel you can take 5 positions. I personally suggest a multiplier of 0.6. If you think you can take 5 positions, take 3. If you think you can take 4 positions, take 2. Don't go for 3 even. Go on a lower side. If you think you are capable of taking 10 positions, go for 6. So put a multiplier, 0.6 multiplier or 0.5 multiplier. Understood? So control your trades. Think of losses that can happen. Don't think of profits. Profits are favorable numbers for us. Think about losses. Based on your losses, you got to decide what should be your risk attitude, how much risk you should be willing to take. I hope you enjoyed the video. If you like my videos, guys, please share them with as many people as possible. Leave a thumbs up on the video. Also, mention something in the comment section. And thanks for listening to me. Still we meet again. Bye bye. God bless all of you. Stay bullish, stay invested. Cheers.